All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I have a confession to make. I have not been able to watch the market very much here today. I'm a new uncle here today, and so that took up a little bit of time here this morning. Excited about it, and everything's great. But as I got back and I start looking at kind of what's going on in the market, what's kind of happening out there, a few things I think are noteworthy. But let's start with the challenge. Gold really hasn't done anything here today. It's been up 20 cents. It's been down 20 cents. The current option value I filled in, we're down just slightly on it. So nothing to adjust or to do anything or to do here with the position. The chart's in a good spot still, but it's just kind of one of Barrick's normal kind of just vanilla days where nothing really is going on. And I know they had earnings, but you'll see it won't even be one of their higher volume days here today, and is kind of being drugged down by the GDX and by gold, which is down just slightly here today. So no changes to make there. Now there are no new signals on the board. If we pull up the scans, there's a few crossovers. Johnson & Johnson has a downside crossover, but coming off of a new high, typically we don't get a lot of good follow through here to it. That said, I do think J&J is one that we could see revisit the 145 to 147 area, but again, I can't trade that for the challenge without the signal. And then on the upside, it's mostly the stocks we saw this morning, a few less than what we saw this morning. EOG isn't on this list, but as I talked about them, I talked about most of these this morning. They're almost all coming off of new lows, and so they almost all have this imagery of Halliburton, which I talked about Halliburton yesterday in the afternoon video, and the trade setup there, and then I mentioned this morning that on the pop this morning I took it off. I would go get back into it if it were a challenge signal here this morning, and I kind of like the setup, and it's not a terrible setup. If you want to trade it higher using a stop on today's low, it sets up. But, as far as the challenge goes, it's not a trigger. We have the downward slope at 20-day moving average, and, we don't often get triggers with that component, and then the 39.1 stochastics well below 50. And while we can get a bull signal with that, it doesn't happen very often. So anyway, that's where the crossovers are, but no new signals, here to go after this afternoon. So I'll go into the close here with Barrick and plenty of cash to go out and to jump into the next trigger or two. Now, as far as the overall market goes, it has been a market today that I mentioned this morning. It was choppy this morning, really choppy. Just dashed through these ranges and this kind of about 8-point range. And I mentioned it's a tight range. It's not a real big range. In anything where I look and go, well, that's super bearish because of how choppy it is. But, just a little choppier than what we have been seeing. And you'll notice the rest of the day, we haven't chopped up, we haven't gotten outside of that range. The market has remained well within that range. Now, individual stocks haven't. Individual stocks have done their own thing and broken these ranges. For instance, JPM, right? This one here, survived some of the chop this morning and then broke on down, went negative, is now back to about even, but very different look to it than what the market is. AT&T, no, not so much. It's just kind of flatline there. Lennar, okay, down, broken below its low, trading on lower here. Caterpillar, gaps up and it's breaking, it's trying to break its highs here today. So we do have different pictures across the board with various stocks, but things like Chipotle and whatnot. But the overall market has stayed within that chop range. Now Michelle forwarded me over and asked me to talk about Procter and Gamble. A question came in about why the sell-off on Procter and Gamble, and is it a buy opportunity here with it? Now, for the challenge, we had to get out of Procter and Gamble the other day. We had the nice breakout, but then hit our time stop, took a small loss, moved on. Glad we did. If we had it, that would have stung. But is this pullback a buy opportunity? In my opinion, yes. I looked, I couldn't see, and I'll have to dig further tonight. I couldn't see anything too dramatic of why, Procter and Gamble went down. I know a buyout, of a smaller element, went what's the right word? Went belly up or was canceled there. So that might have something to do with it. But when you look at how Procter & Gamble trades historically, and let me just get rid of all the indicators, pullbacks like this are not uncommon. This is not something that you go, wow, that's super bearish. A lot of times these are just buy opportunities, and we see Procter & Gamble have these where it can shoot down a good chunk in a very short period of time, and most of the sell happens within 2 or 3 days. To where it just gives one of these, hefty pullbacks, right? And I don't want to say the pullback's over because it could still pull back a little bit more, but it's now down in that lower Bollinger Band. But, having this kind of false breakout to the upside and then, kind of coming on back down. Sometimes these can be traps and you can see it come all the way down to 120. But for me, when is Procter & Gamble a buy? It's a buy when, we could potentially get another challenge trigger on it in a day or two. Probably not tomorrow with the way the moving averages are. But, just like any other one of these dips, I'm interested when. I'm interested when we see the stock close above the high from the prior day, right? And if we come back and look at this pullback right, let's take this one right here. You'll notice, we get this pullback, kind of sharp down, next day down, and then the next day up, and we close above the high from the prior day. Well, that's when I'm starting to get interested. That's when I say, all right, I'm willing to go out and see if, there's a trade opportunity here. It doesn't mean that the bottom's in, right? In fact, the next day, boom, down it went. But 3 days later, pops on back and you're golden. But that's when I start to get interested. And you've heard me say that many times, but close above the high of the prior day. Now I'm interested in going, all right, do I get a solid risk reward? How do I want to set this up? But, when we get that, then I'm interested. And then that's kind of as simple as I can get there, with Procter & Gamble. And, yesterday at the closing video, we talked about Halliburton. And why was I interested in Halliburton? Why did I jump in? Well, it was set to close above the high from the prior day, right? I had a nice little 3-day sell-off, set to close above the high from the prior day. Okay, I'm willing to go out and put some money in there, and get involved. Where had it not closed above the high from the prior day, I'm not nearly as interested, right? Not nearly as interested in it. So, that's my thought on Procter & Gamble, as far as holding the options or, buying the exact same options as we had for the challenge. No, I'd get some different options if you're looking at bottom picking it right here. I'd get a little bit more time, in those options just so you can weather a little bit. Procter & Gamble is not a cheap company, right? This is not a company where we can go and argue the merits of its cheapness and its, valuation here. I mean, it's trading at a forward PE of 24 almost, current PE of 68. Its earnings per share growth next year is only 6%. Book value, I mean, this thing's trading at 7 times book. There's not a lot that you can look at this and say this is cheap. I mean, it's only a 2.5% dividend. So, it's not one of those that I can go and say, well, I want to be a buyer because this is a cheap stock, and over time, it will improve. The way when we've talked about things like IBM or we've talked about things like Starbucks, right? You can't do that with Procter, and with a lot of the stocks within that sector, a Pepsi, we can't argue that it's cheap. We could not argue that it was cheap at 135. We couldn't argue that it was cheap at 125 because it simply is not cheap. It is expensive on so many historical bases, but it doesn't mean it's not gonna keep going up, right? This thing just keeps on, ratcheting higher, even though it is expensive on a historical basis. And in fact, with Pepsi, I'm very interested to see the earnings tomorrow morning. I think that could be a very interesting reaction here on Pepsi, and a reaction that maybe the options do not have priced correctly, meaning we could have a bigger reaction than what the options have priced in here for it. Okay. All right. Now, one last thing I want to make a comment on. I made a comment this morning in the note that there are some negative divergences out there in the market, right? That's what the bears can kind of look at. The bears can say, well, there's some negative divergences. But I want to go and add a little context to that, right? What is a negative divergence? A negative divergence is where an indicator, okay, in the price level of a stock, so in this case the market back here in July, are different. Meaning, here in September, the stock price or the market price gets back to the same level, but the MACD, a momentum oscillator, doesn't. The MACD is actually downward sloping. It's diverging from the movement in the stock. Right here, we had the lows, right? And then we had the lows right here in October, right? So we had the August lows and the October lows. This isn't divergence, right? The indicator's doing what the stock price is doing. The indicator was lower here in June. It's higher in August, and it's higher in October. Well, so's the price of the stock. They're moving in the same direction, right? Negative divergence is where the indicators do not necessarily move in the same direction. We have that in many different places out there in the market, depending on which indicators you want to use, what metric you want to use. If you want to use even highs versus lows, we can go and we can find some of those, right? Here's the problem with using divergences as negative divergences as an argument for a bearish thesis. Is that they don't necessarily have any predictive value. They're the type of thing that when something starts to go down, and had we seen the market melt down here in October and November, everyone would have pointed to this negative divergence that we saw, right? Divergences are oftentimes they're looked at in hindsight. They're not necessarily a great foresight indicator. The way that I use them, the way that I look at divergences are simply warnings. That is it. That they're just simple warnings and of possible action that could come, and I need to be aware that that could happen. Now, is that adding anything? Yeah, maybe not, right? Because anything can happen any day. We're always aware of, what could happen. But, some of those negative divergences, if we were to see the market, let's just say the market tops right here and starts to pull on back, right? And, the MACD on the market just kind of turns down kind of like this. That would be some negative divergence. We have a market setting a new high. We have a MACD that doesn't set a new high. That would be negative divergence with the MACD. Is it super telling? Some people would argue that it absolutely is. Some people would make arguments that there's kind of no better indicator than some of these divergences. As far as divergences with individual stocks, I trust them a lot more than I trust divergences when it comes to market and market indicators. And when using the market or a market indicator, I'd much rather look at a divergence, with the RSI and, something that's called a failure break, right? Which a failure break is when the RSI is overbought, right? And then it comes into a territory where it's not as overbought. and then goes back up to overbought, right? This low in the RSI becomes a key level. And when it's broken, typically you see some heavy selling come in. And that happened. And we only saw 1 day of heavy selling, right? It only took 1 day of heavy selling for that to happen, for that to come in. So that's pretty remarkable. We don't often see that when we get that kind of failure break. We had a failure break right back here in July. We had a lot more selling after that. But we had a failure break right here in November, and it was 2 days of selling, and, the bulls were back at it. So, it tells you a lot about the strength of what this market has been, and, what it continues to be overall. Okay. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.